Today I want to talk to you about a crisis in our investing futures. It's the future of wealth. Now, what do I mean by that? Well, the new economy has arrived, and the way people are investing has changed. Not changing, but has changed, and that's a fact. What you did yesterday, especially the ideas from 20, 15, 10, even 5 years ago, are becoming antiquated to a point of having a serious negative impact on your portfolio. Folks, I want to introduce you to my good friend Lance Ippolito. He is a professional he's an ex-hedge fund trader. He trades options, futures, and stocks, and today we're going to interview him. And this is going to be an amazing experience. We're going to get into it in just a few seconds. Lance is going to show you today how you can begin the journey of making life-changing decisions that can impact you significantly and, more importantly, increase your bottom line. That's going to be the topics of today's talk. All right, my name is Roger Scott, as most of you know, and I'm here with my friends Lance. And Lance is a hedge fund manager, he's an ex-hedge fund trader, and we're going to talk about markets, wealth, changes in society, and a lot of fun stuff. I think you guys are going to get tons out of this. Welcome.
Thank you, Roger.
Can we start off by you telling us a little bit about yourself, your background, your family life, just something so we know who you are?
Oh, for sure. So I grew up in Tampa, Florida. I did the typical college 4-year degree. I got a degree in finance and thought, hey, I need to find a nice, secure job, make a living. I was raised in my mother working for a big Fortune 500 company, 30 years, safe, get a retirement, buy the one house, live in it, have kids, raise a family. I left college thinking I was going to be a famous trader for Goldman Sachs or JP Morgan, and realized they wouldn't even look at me. And I was going for my executive MBA at the time, and I thought, why am I going to spend this money? So I got a job, thankfully, at Citigroup Global Markets. I worked 12 hours a day, couldn't get Christmas off, couldn't get holidays off, Thanksgiving off, and simply couldn't take it anymore. I was getting heavy, I was getting gray hair, so I left and got a job for an investment fund. Paying my dues, getting my CTA title, managing the commodities fund, and working with the equity fund as well. I did that for about 2 years. I took a vacation to Costa Rica for 2 weeks. And let's just say I didn't come back for about 2 months.
Really? Nice.
I realized when I was there, I just needed the internet. A tablet, a phone, or a laptop.
Right.
I could still make money trading. So when I came back here to the States, I started trading my own money. Mostly stocks, options, getting involved in medical cannabis as well. Having other sources of income every month besides just my one job.
Mm-hmm.
So right now, for the past 3 or 4 years, I've been trading full time and absolutely love it.
Perfect. So let me ask you this question. How long did it take you, if you were to put a time period on it, how long did it take you to go from having that idealistic point of view, I'm going to go to school, I'm going to get a job, I'm going to be a success, to realizing that it doesn't work that way anymore?
Ooh, that's a very good question. I kept having the thought of, I'm going to find a job right out of college that pays well, and that will be it. And I realized the money I would make, I would just go and spend it. And it took about 2 to 3 years to really register in my mind that there has to be an alternative to what I've been told. So I would say probably 2 to 3 years before it hit me. It said, I need to find other ways to make money rather than sitting at a corporate job for 12 hours a day.
Otherwise, you'll be a slave to your desk, basically, for the remainder of your life. You know, I'll tell you something funny, and you're actually reminding me of something really, really funny. I grew up in Los Angeles, and I'm a little bit older than you, probably a lot older than you. But I remember when I was a kid. I remember when I was in, I think it was 6th grade, and we took a field trip to UCLA. UCLA was about 15 miles from my house, and you know, when you're little, when you're in 6th grade, a 20-year-old looks very old, you know, together, like it's a grown-up.
So I remember this experience of going to UCLA and seeing these kids, 20-year-old kids. Now they're kids, obviously, but back then they were these grown-ups. And I was thinking to myself, wow, if you make it here, if you make it to UCLA into the bachelor's program, you're set for life, because that's what it was. When I was a kid, my folks would tell me, you go to school for 4 years, you go to high school, you get good grades, you go to UCLA, and you're done. By the time I got to high school, I started realizing that, hey, now you need a master's degree. The bachelor's degree is just not good enough anymore. Before, for the last 30 years, it was good enough, but it's not good enough anymore. So then you needed a master's degree. Well, okay, by the time I got to college, the master's degree wasn't good enough. Everybody had a master's degree. Then you needed a PhD degree. And then finally, it got to a point where even if you have a PhD degree, you're still starting from scratch. And of course, this process took many decades, took 2-3 decades, but it's not getting any better, is it? It's not changing.
Everyone has a college degree. Everyone has an MBA. When I went to apply for jobs, I couldn't even fill in the application because my university was not listed. I didn't go to Harvard. I didn't go to Duke. I wasn't even considered. Imagine working 4, 5, 6, 8 years in school your whole life for that dream job to not even be attainable.
Lance, to further your story, I was just talking to my nephew, okay? My nephew, he lives in LA. He got the perfect score on his SAT, on the math portion. He's applying for $15 an hour jobs right now. He went to Harvard on a full scholarship, and he's applying for $15 jobs right now. Now,
Mind-blowing.
Not mind-blowing. And you literally took the words out of my mouth. It's mind-blowing. It's completely mind-blowing. So that's why we're here. Let's talk a little bit about your trading style. How would you describe your trading style? Are you a technical trader, fundamental trader? What do you look at? Let's talk a little bit about how you trade.
The one thing I feel that separates me from everyone else out there is psychology. I go against the crowd. If everyone wants to sell the market, I'm the one buying. If everyone thinks Nvidia is the greatest stock in the world, I'm the one selling. If everyone thinks cannabis stocks are going to go to the moon, I'm shorting. Nobody loves cannabis stocks. Like right now, I'm buying them all up. I go against the crowd. I go against what Wall Street is thinking, and I take the other side. And I've realized, especially over the past 2 years, the greatest opportunities are out there when nobody is thinking or nobody's looking.
So you're a contrary trader, contrary sentiment trader, if you will.
Exactly.
It's interesting that you say that, because folks, for those, I'm sure some of you have heard me speak before, and for those of you who haven't, here's an interesting tidbit for you. A lot of traders don't realize this, but I'm a quant trader, I do everything, I quantify everything. Over the last 20 years, the US stock market has generated an average annual return of 5.98%. It's not a trending market. A lot of traders, they look at the stock market and they say, wow, it went from here to there. But if they look at it over time, over 20 years, 30 years, 40 years, those numbers get smaller and smaller. The stock market, the US stock market, in actuality is a counter-trending market. And it only trends about 30% of the time. And when I say that to people, they look at me and they ask, well, how does Amazon go from $5 to $2,000? Well, how many stocks have done that? That's the problem. A handful, 20, 30, 40. It doesn't happen a lot. Most stocks are counter-trending stocks. So when the markets are moving higher, the institutional trader is actually selling to the retail trader, which in effect is what you're doing.
Exactly. So one of the things that I like to look at is the financial media. I do. I don't watch it every day. But what I do is realize if everyone's recommending or an analyst recommended or put a buy on this stock, that's when I'm taking the opportunity to sell it. So like when a Qualcomm or a Disney or a Google broke out the other day, and now everyone on the desk or the media, Google's undervalued, Qualcomm's undervalued, Disney's undervalued. I'm using those opportunities to sell, to take profits on the breakout or to the retail traders. I'm the one who wants to sell to them. just like the institutions. And that's one of my biggest things is following institutional money. It could be institutional order flow, it could be institutional order flow in the option market. I'm using that as an opportunity to gain an advantage to profit really from the retail traders out there.
Right, you're basically playing the house. You're playing Vegas. You want to get rich just like Las Vegas became successful. You want to build Vegas. Folks, for those of you who don't know, Vegas was built based on losers. The people who are sitting at the table, that's how Vegas makes their money. All those beautiful hotels you see, that's all from people sitting at the table and losing money. There's an edge. Vegas has an edge, and that's what Lance is really talking about. He turns the tables and he puts that edge to himself. He gives himself that edge because he's in line with institutional trader and taking the opposite sides of the trades of the retail trader.
Exactly. And who wouldn't want to be Vegas? Who wouldn't want to be the house?
Right.
Who wouldn't want the edge?
Right.
I do.
So let me ask you a deeper question. Do you, you mentioned, I now understand the basic philosophy of how you trade, but what about the actual information, the flow of information? Are you basing it on news? Are you looking at internals? Are you looking at earnings? Give me some idea of your process.
Fantastic question. I have a criteria I set. Back when I was with my hedge fund, I have an institutional order flow scanner. It's not available to retail traders. I still thankfully have my connections from my fund days where I can see every large option order that hits the tape. So I separate it from about 50 to 75 stocks that I personally have traded and made really good money on. Size, criteria, opening, exchanges, sweep spreads, all that. I have it filtered throughout the day. So I use that to get trade ideas based out of. Another thing I like to do is I really like trading earnings and looking at earnings, especially for undervalued and overvalued companies. And if you combine that with technicals, short float, looking for names that can squeeze higher on good numbers. I like looking at insider buying and selling. That's public information out there. Anything I can to have an advantage, especially if I'm trading short term, could be anywhere from a week to 3 months. If I could catch a big move and then use that move to play the options, that's how I made my living. Not through 5, 10, 15% gains. I'm talking I want those big trades at 2, 3, 400, 500, 1,000% returns. I may hit 1 out of every 3 or 4 right, but those winners are so substantial that it makes up for the losers. And I use this analogy. Actually, last night I was watching professional poker on TV, and I get the question a lot: what percentage of your trades are winners? I don't know. I don't look at that. My focus is account growth. So if I could take a $10,000 account to a $100,000 account, that's a success for me. And going back to poker, when I was watching it, I don't go to a pro poker player and say, well, how many hands did you win? I look at it and say, how many chips do you have? What's the size of your account? What's the size of your stacker in poker? And that's how I look at trading. When the time is right, bet big, just like you would in poker if you have a good hand. And when you're not confident or the market's shaky, play small bets. And if you get hit, you get hit. But when you have confidence, and that's the key in trading, and you can up your size, maybe shove a little bit more chips in there, and have that large return, that's how you could grow your account.
Well, it's interesting that you're saying this because, and actually, folks, this is what separates a real professional trader from an amateur. It's all about expectancy. And what Lance is saying, and I'll just kind of rephrase what he said in my own words. For anyone who's been following me for a while knows that there's 2 elements to positive trading: expectancy and money management. You need the expectancy to make the song sound like a song, and then you need the money management to increase the bet size like an amplifier. You would increase the volume and decrease the volume. Professional traders hardly ever look at percentage of profitability. They look at account growth. They look at expectancy. They look at profit factor. They're not looking at how many trades am I going to be accurate, because here's what's going to happen. you can be accurate 9 times out of 10, but on that 10th trade, you could lose everything. It's actually, there's a name for it. It's called walking up the stairs and falling down. It happens a lot to option traders, especially option writers. You'll see an option trader, an option seller, make a quarter, make another quarter, make another quarter, and they'll look like a stock market genius. And then on the 10th trade, they'll give it all back. So what a professional trader does is they don't really focus on how often they are right. Being right and making money are completely uncorrelated. There's no correlation in trading between being right and making money. And that's why I always tell you guys that you don't have to be right 8 out of 10 times. You can be right 2 out of 8 times or 3 out of 10 times, and you can still make consistent profit. Paul Tudor Jones, one of the greatest traders of our time, he's right about 25% of the time. And that's according to him. That's not my theory. So again, Lance is not concerned with being right all the time. He's concerned with account growth. He achieves positive expectancy through the size of his winners, not the number of his winners. And that's a hallmark and a staple of a professional trader. I just wanted to clarify that and kind of decode what you're saying in different words for folks who may not understand exactly what we're talking about.
You put it exceptional. Exactly what I want to convey, you put it out there. And it may sound crazy, especially if you're an athlete. You know, let's say you play baseball, you want that high batting average. But in trading, you can actually have a low batting average and grow your account or get those big gains you always wanted. And that's the one advantage out there that most retail traders don't understand, because naturally as human beings, we want to be right.
You just hit on something big. It's about being right, but you know what I think it's more than that? Control. It's the beginner wants to control the market, right? I thought about it. I gave it a lot of thought, and I thought about it. I'm like, is it about being right? Yes, but it's more than that. It's about control. Nothing makes that beginner excited like controlling the markets, right? Remember when you started out, you wanted to control the markets.
Think you can move that.
The boss.
Stock.
You wanted to be the boss, right? You wanted the market to work on your understanding, not on its own understanding, right? But it doesn't work that way, as we all know.
Yeah.
So, yeah. But I'm sorry to interrupt you, but I had to because you really pointed it out. Being right, beginner wants to be right, and folks, again, being right, and that's going to be one of the first things you must overcome. Being right and making money have nothing to do with each other in the markets. Sorry to interrupt you, but I had to because you were right on the dot there.
It's just like you hear these successful CEOs or these entrepreneurs, they fail 9 times creating a business, and then boom, they hit that business and it does a fortune. Let your ego go.
Exactly.
Let it go. Your stress, let it fade away. Your gray hairs will go away. You'll be much happier in life, and that trading account will start moving up.
And above all, you'll see the market objectively once again, because you know what happens when you're in the red.
You're so focused, zoomed in, that tunnel vision.
It's like standing and looking at a wall like this, and thinking you're getting perspective, right? Which we obviously know doesn't happen. So let me ask you this, and I'll move on to another topic, but this is really interesting, so I want to learn more about this. I understand about your philosophy, and I understand how you look at the markets, and I understand what methodology you use, but to get a little bit more specific, because we have a lot of guys here who may want to adopt a similar style to you, because it sounds really good, because there's a lot of things going on that people don't agree with, especially right now with the politics, with China, with Mexico. There's a lot of things going on, and there's a lot of contradictory information that's causing volatility. So how do you, once you find, let's say you find a stock ZYX, and you like it. Let's say everybody's saying it's a dog, but you like it. How do you measure the risk versus the reward? How do you actually position yourself in that stock?
So let's say everyone is not liking semiconductors right now. We use that as an example. People think, oh, we're scared of the China situation going on. Apple's falling, tech is falling, Nvidia's off the highs. Instead, what I'll do, and one of my philosophies out there, is finding stocks that don't move one-to-one with, let's say, the S&P or the NASDAQ. So obviously, if the S&P is down 2% tomorrow, probably 98% of the stocks are going to be down too, right?
Correct, right.
Instead, what I'll do is find a name that I think has been beaten down, that can potentially move if we have good news, or if there's a pop or a short squeeze. So I want a high short float percentage. I want to look usually at cheap options. So if I'm wrong, I lose a little bit. If I'm right, those options may go from 20 cents to $1.
Yeah, you don't want to be in a volatility crush when you're paying. Folks, what Lance is getting to is when options break out, when stocks break out, options become very over expensive. So what he's doing is he doesn't want to buy an option that's setting itself up for a volatility crush. So he's buying an option as it's getting cheaper as opposed to getting more expensive, which is a brilliant idea with options because options tend to overreact both ways, up and down.
Exactly. I want to risk a little bit to make a lot.
Right.
And that's the strategy. So again, going back to the percentage wise, maybe 5 out of 10 are correct, but the ones that are correct are going to go up exceptional in value, or going to return those large returns that I'm looking for in trading. And I can simply, if I'm wrong, cut my losses.
Of course.
Use a tight stop, cut them. If I'm wrong, move on.
Next question, do you have when you get into a trade, do you set your stop loss level and profit target before you get into a trade or as you're in the trade?
So as soon as I enter a trade, I put my targets out there, already set.
Okay.
Stop loss, for beginner traders, if you're trading options, I don't use a stop loss.
Smart man.
Those pesky market
floor
makers,
traders.
they're gonna come and find you.
Folks, Lance and I have never ever talked about this topic, and he's saying the exact same thing that I've been preaching for years and years. Never use stop losses with options. That's a man who knows what he's talking about. So let's continue.
But I'll do this. Like for example, I bought Cracker Barrel call options. They're not the most liquid options out there. Had earnings, stock went up. I was driving here to meet you. Bought the options for $1.30 yesterday. Today, Cracker Barrel went up, had a pop, and then later on in the afternoon, it faded. I already took profits in Cracker Barrel. When I was driving here, got my alert on my phone, because as soon as I entered the trade, I put my targets out there. So 130, target out 230. I look on my phone, target was hit. If Cracker Barrel goes down $5 from now, $2 from now, goes up $10 from now, I already made my money. So as soon as I enter a trade, I put my targets out there. If I'm buying a stock, I'll put an alert down below.
Perfect.
So if I get that message on my laptop, computer, my phone, technology's fantastic.
And you don't have to watch the market all day.
I don't have to watch it.
Exactly.
I don't have to be glued to my computer screen.
You're not a slave to your desk.
Exactly. And that's what I love the way trading is going in the future, how I can have everything right on my phone, right on my tablet, my laptop. I don't have to be glued to the desk all day.
And I'm also finding, personally, I'm finding the less I'm focusing on the market intraday, the better objectivity I get, because it doesn't suck you into. It's like sitting there watching all those prices, and your mind starts wondering, and next thing you know, you're
Clicking the mouse.
Clicking the mouse, exactly. So this, believe it or not, I'll tell you a funny story very quickly. I actually know a guy who's one of the best traders I've ever met in my life, and he's a roofer in Kansas. And here's the thing: he's so wealthy. He can probably buy in cash every property that he's ever worked on at this point. But the reason he does it, and I asked him about it, because he's not a young man anymore. I've known him for 30 years. And the reason he does it is because it keeps him away from watching the market. Being on the roof is the only thing, because he's so focused about protecting himself and the balancing himself and getting everything done, that he can completely escape the market, and it gives him that edge.
Some of the largest gains I've made in trading have been when I was in Alaska, no access to internet, I couldn't watch the markets for 2 weeks. Best gains I've made. Or even right now, when I go 50 miles offshore on the boat, I don't have the internet. I can't watch the markets. And people say, oh, aren't you scared of the positions, or don't you want to look at your book? No. Really, the greatest advantage I have is not being glued to the computer screen.
Because you're letting the market work in your favor and develop and do what you want it to do. You're not going to help it achieve, you're not going to help propel the market higher.
Me clicking the mouse or staring at
or saying, please God, I wanted to go higher. No,
it's
that's not going to
move
work.
Markets. That's why your roofer friend has probably been so successful.
Right. And he tried going the other way. He got himself an office, several computers, a debt, the whole 9 yards. And you know what happened? Started losing money and said, wait a minute, I'm on the wrong path here. He tried that, yeah. It reminds me of that book, How I Made $2 Million in the Stock Market by Darvis. This is an old book we're talking about. I believe the book is about 50 or 60 years old.
Yeah.
But it's a dancer. The guy was a dancer, made money while dancing, while being on the road. And as soon as he got off the road, he started really doing it for a living, really getting into it, and he started losing money. And he realized that, hey, the only way I can succeed, the only way I can really profit is if I stick to my original plan. And you know what I say, whatever works.
Exactly.
So tell me a little bit about Costa Rica and how it impacted your life, what you've learned there, how it impacted your trading and so forth.
So I went to Costa Rica with the intention of getting away for about 10 days. I was working for the firm and I had no days off. I was even trading sometimes the German DAX. I mean, that's how crazy my schedule was. So I went there, I went to Puerto Viejo. It's right north of Panama, on the east side of Costa Rica. So away from the mountains and Manuel Antonio, it's a surfer town. I had an Airbnb right on the beach. It rains most of the time in Costa Rica,
Sure.
being in the rainforest. So some days I couldn't even leave the house that I rented because you would literally have to drive on the beach, and if you took a car, you'd get stuck. No AC, no internet. Literally right across the beach, I would have to build a little trough so the water wouldn't come in the house. And I started just really thinking of, do I really want to just be glued to the one job, trading all day, making someone else money? And it started to click in my head thinking, I trade really well. I've made the firm a lot of money. And what was I getting in return? Not much. The peace of mind I had, just overall being more relaxed, the lifestyle, no stress, not having the pressure of working for the firm and making clients money. When I came back to the States here, I said, I trade. That's what I do. Why don't I just trade my own account, make money for myself? And that's when I started to branch out, having more flexibility in trading than doing, hey, you have to trade the S&P because that's what you're a trader for the firm. And I branched off stocks, options, doing angel investing, raising capital for cannabis companies. I had way more freedom. And freedom, there's no price tag on it. They can offer me, Lance, here's $1 million a year, come work for us, but you're going to be working 60, 70 hours a week. I'd probably say no, because I don't have my freedom.
Yeah, and so how long did you stay there? How long did you stay in America?
Well, my girlfriend came back after 10 days, and I stayed. So when I came back, I had no job, no girlfriend, no place to stay. So really starting all over again. But I loved it though, starting from scratch again. It was in my late 20s, really starting all over again.
Timing was good.
Timing was great. Everything I learned in the past, or what I was told, find the steady job, buy the house, everything just went away.
Mm-hmm.
It was a new beginning of life, you can say. So I think I ended up staying a little over 2 months. I went to kind of like a carnival, like a fair in Costa Rica outside the airport on New Year's. And if anyone's been to like a Florida State Fair, their local fair, imagine that times 10 in Costa Rica. You can win liquor bottles, you can win cash, it rained with the bulls.
Oh my.
Yeah, it was entertaining. But yeah, I would say about 2.5 months or so, I came back.
And what were you doing when you came back? I mean, I'm sure you had to start, like you said, you didn't have a job, you had to start all over. So what happened? I mean, that's like the most interesting part. Let me ask you this, let me back up. When you came back, what kind of financial condition were you in?
One of the reasons I came back is all the money I saved working
You spent.
vanished.
Got it.
And most people think, oh, Costa Rica or Latin America, not expensive. But when you're there and you're traveling, you're enjoying life, in Costa Rica, it's like the Sweden of Latin America. It is pretty expensive.
Interesting.
Living on the beach, money goes quickly. So when I came back here to the States, it was one of the first times in the past, or in the last few years, or actually since I got out of college, where I was like, I need to have some income coming in. So it was almost a do or die. Like if I didn't make money for myself in trading, I really didn't have any other alternatives.
So it was like do or die. You literally in a do or die situation.
If you want to laugh, for a couple months, I was trading out of my mom's house. That's the pressure I had on myself.
Folks, Lance is the real deal. And we're entering a new generation of wealth. And if you don't change your ways, change how you think about investment, well, frankly, you're going to end up being a big loser. We're here to show you why the markets don't work the way they used to. You'll learn why emerging trends dominate the landscape and why they'll continue to do so. We're going to teach you why cryptos are not a fad. You'll learn why a secondary income could be the difference between being on the beach with your grandkids and asking for time off from your second job. You'll also learn why cannabis is not overbought.
We just finished talking. You basically came back from South America and you literally had to move into your mom's house because you went through all your cash. Because South America is not as cheap as a lot of Americans think it is. It's just one of those things.
Right.
So tell me more. I want to hear the rest of the story because it seems like you kind of forced yourself to develop a trading style based on your need. You needed to succeed. You really didn't have much of a choice here.
No, I came in with the goal of realistically how much could I live off, and this is going back to kind of the Costa Rica lifestyle, to where the luxuries you have here in the States of going grocery shopping even, or having AC. I didn't have in Costa Rica, so sometimes I literally just have coconuts or fruit, and that's what I eat all day, especially if I couldn't leave the house because I couldn't go to the markets, or it was about 2 miles away, or walk 2 miles in the pouring rain. I came back here and I realized realistically I probably need to make about $2,000 a month to survive, to live. And it may sound like most people out there, $2,000 is nothing. Some people make that a day trading. But when you're starting off all over again, and my account was very small at the time, very, very small. That was my goal. I did that for about 6 months, and then it started scaling up. So it went from 2,000 to 2,400 to 2,800 to 3,500. And then using that, again, focusing on overall account growth, I started having money come in. And that gave me flexibility. I could get back on my feet, start living quote unquote normal life again.
And it's interesting when you explain, and I was doing a live class a few days ago, and I remember getting up there and I was trying to explain expectancy and how you don't need to have that huge percentage of winners trades. And you could see the look on people's faces when you tell them that and you show them the different scenarios. And it's like, wow, it's like a sign of relief. Like, wow, I don't have to be right 9 out of 10 times. No, you don't. You just need to make money. It's not about being right. And what I did was actually, I did 3 scenarios. A system that was right 80% of the time, a system that was right 50% of the time, and a system that was right 25% of the time. And I just just moved some variables around to show that, hey, that each of these systems is profitable. It's just a matter of your personality and your style and so forth. But once people understand that, genuinely understand that, not just hear it, but appreciate it and understand it, they typically become better traders. They typically become better traders because they don't have that pressure to be right all the time.
Exactly.
So an interesting question I have for you, after you came back and you moved in with your mom and now you're trading and things are moving back up, how long did it take you to get out of your mom's?
I would say probably 3 months, 3 or 4 months.
It's not a long time, really.
No. I had 2 screens. I had a computer, 2 screens, and that's all I needed. I went from, Roger, when I tell you this, you're not going to believe me. I went from an office with 32, 32, 32, 32, 32, 32 monitors. So this whole wall would be monitors. That whole wall would be monitors. I have 2 eyes. I can only look at so many charts during the day. It may look fantastic, and it may look like you have the greatest trading computer out there, but was it an advantage? I don't think so.
No, I've never been able to see past 2 monitors. My neck starts hurting. I just can't do it.
Walk around. Now, when you bring clients in,
it looks nice.
It looks nice. And as a hedge fund, the goal is to make your clients money, but people don't realize when you're an investment manager, a hedge fund manager, whatever you want to call it, you're a really good salesperson.
Right.
And that's how they become successful, is gathering assets.
Of course.
Not necessarily they have this amazing trading strategy.
Right. It's not the trading performance. It's lack of losses, lack of volatility, and how much you can bring in.
That's how you get paid.
Absolutely. Lance is 100% right. It's about bringing money in. And that's why it's so hard for any of you who want to become fund managers. There's a 5-year waiting line. In other words, you need to show 5 years of actual performance before anybody who is worth anybody is going to give you money, okay? And there's people who are in this industry and all they do, they're hired to raise capital. And the first question they're gonna ask you, and they have literally unlimited amount of capital to give you, but the first question they're gonna ask you is, how long have you been doing this and what's your MAR ratio? And let me go over the MAR ratio really quickly because it completely backs up what Lance is talking about in terms of not having a huge amount of winners in terms of having overall account growth. MAR is considered maximum adverse risk. And what MAR is you take your average annual return and you divide it by the maximum loss. So you're looking at your average gains, but you're looking at your maximum loss, okay? And before the 2008 crash, everybody was looking at average return versus average loss. But after 2008, everybody started looking at average return versus maximum loss. And what you want is you want your MAR ratio to be 1.5 or higher, which means on average, you're winning 1.5 times more than what you're losing. And before 2008, a 2 MAR was high, but now 1.5 MAR is sufficient enough. But the MAR doesn't take into account how often you make money or how often you lose money. The MAR just simply takes into account your average winner and your average winner and your biggest loser over time, your biggest drawdown over time. So again, there's very little correlation in professional trading between accuracy and account growth. And I want you guys to remember this because this is very important and it's one of the biggest fallacies that traders have. Beginners especially, we need to be right, we need to be right. And that's why entry, everyone is so focused on entry because entry is about being right. If you got the right entry, you'll be right on the trade, but actually the most important thing and what professional traders will tell you is the exits. The money is in the exits. Profit target, getting out of a losing trade, not in getting into a trade, okay? If you talk to Lance, he'll tell you he's already told you that his average win rate is probably 50% or less, which means you can flip a coin and get a 50% win rate. But the key is what you do after you enter the trade. That's where the fun starts.
Exactly.
How your mind works after you enter the trade. And that's what I tell people. But I got an interesting question for you. I was just thinking about everything you've told me about your experiences. And I really appreciate you opening up and telling us this. It really means a lot and I really do appreciate it, and I'm sure our readers do, our viewers do as well. So here's my question to you. So you come back from South America, you realize you need to make money now, you move in with your mom, you start getting a plan together, and you start making money. What happens after that?
So, and I told Roger off camera that I've never told anyone I moved back in with my mom for a few months, so that was embarrassing.
Hey, it happens. It's life. Life is what happens when you're planning something else.
Correct. I was successful in trading. I was having money come in, but I also knew at the same time, just like with today's markets, every day I'm not going to go be a superhero and make tons of money trading. Times are walking away, going out to lunch, playing golf is the best thing to do. I was fortunate. I bought a house actually with a mother-in-law suite attached in the backyard. So that was my first big purchase, you can say. And it's fun, what am I doing with this mother-in-law suite? So I fixed it up, started Airbnb-ing it out.
Oh, okay.
Next thing you know, I got $800 a month coming in. 800 to about $1,000 a month coming in from renting it out. How much time did it take? Maybe a month to fix the place up, and I spend maybe a few hours a month. They hire a cleaning lady, they do everything, buying furniture for it, spent a little bit of money, and now I have monthly income besides trading. Passive income, exactly. That really expands other source of income rather than trading, but B, it's nice to have other assets in your name. So that was kind of the start to it, of developing a secondary income. And then I branched off into just meeting with the buddy who owned the local tree nursery or tree farm, and landscaping business too. And I spoke with him, I knew him from college, having conversation, and started putting a little bit of the money I was making and trading into it, buying a little bit of ownership. Now every month I get a check from him. So I'm diversifying, just like you diversify your investments. Maybe you buy gold, silver, bonds, stocks.
Into uncorrelated revenue streams.
I diversified myself.
Right.
And when I came back from Costa Rica, that was my goal, was myself, not making money for others. I wanted to make money for myself. So here I am having 3 sources of money come in every month. About a year ago, I was dead broke living at home.
Right.
It's crazy how things can turn around.
Absolutely.
And one of the things I always tell my friends who have been working a 9-to-5 job is, are you investing in yourself? No. They're investing in someone else.
And it'll never ever begin to happen until you stop doing what you were doing and start doing something different. Everybody's always waiting for it to happen to them, but folks, it won't. Unless you take that first step, it will never happen.
You have to take the risk.
And the reason you took it is because you literally didn't have a choice. You literally had to take that risk.
But that's what it took. Because if I didn't, I'd be doing the same thing that I was years ago, getting the same result, which would be complacency, barely getting by. Even when I was working for one of the biggest banks, you can say, financial institutions in the world out of college, there was no move higher up. So what, I make an extra 5-10 grand a year, my cost of living is just gonna go up. I would never get ahead of the curve. I would never get ahead of life. And I'm basically just going on like a hamster on a wheel,
right.
continuously,
right.
grinding every day just to get by.
And meanwhile, making somebody else rich, and you're getting older.
Why do these big banks and financial firms keep growing, keep making money? It's from people like me.
Absolutely. Why does Vegas keep growing? Because it's always look at the big picture, and you will find out the answer.
Be the house.
Right.
Have the advantage.
Right. Have that edge on your side. So what happens next? Tell us more. Tell us how you took things to the next level.
So I had a conversation with a friend who actually, back in my fund days, was an investor, and we had a phone conversation. He's a biotech CEO, former biotech CEO. Took a few companies public. Some got acquired by big pharma. Fantastic guy. Owns some almond farms, just diversified beyond belief. And he came up to me and saying, Lance, you have the look, you have experience in the equity markets. What if you tried raising money for my company? And at the time, he was starting a medical cannabis company, focusing on cannabinoids to treat MS. And again, this is years ago. This is before, the cannabis boom. Marijuana was taboo.
Right.
At the time, I didn't tell my family about it. What I was doing, I was very selective on who I reached out to try to raise capital for his medical cannabis company. It turned out we had a couple presentations here in Florida and Vancouver. And we raised a few $1 million for them. About a year later, company went public. Everyone was happy. And now, again, this is about 4 or 5 years ago, booming. It was very beneficial to me, and it was one of the greatest experiences I had to be involved in the early stages, to see how cannabis has grown, but also getting in with management, meeting management of companies, especially in the cannabis space, and being a part of something, taking a company public out there. Now, again, it's not some huge Uber or Lyft out there, but from an institutional side, the amount of growth out there of getting in early, imagine buying a stock for $2 and a year later it's $6. It's a massive return. And there's money to be made out there right now in the space.
The amount of money right now in that space, it's just a different type of money, but there's definitely another leg up coming in.
And again, back in these days, if you wanted to invest in cannabis, it was very hard for people in the States because no one wanted to be a part of it.
Right.
Okay.
Too much risk.
Too much risk.
Too much federal prosecution and
federal,
scrutiny.
exactly. Right. And I was going to athletes out there who would come to me and say, I would love to invest millions of dollars. I just don't want my name being associated with it. Now, if I try to raise money for a cannabis company, I can make one phone call and get probably $10 million coming in. But it was taboo. I didn't tell my family. I didn't tell my friends what I was doing. If you wanted to be involved in cannabis back then, you had 3 options. You had GW Pharma, based out of the UK, which is like the Apple of cannabis back then. You had a small company, Cara Therapeutics, and you had Zynerba Pharmaceuticals. If you wanted to go into your Schwab or TD account, those were your 3 options. No one really even heard of them back then.
Right.
Now, you could pick 50 names, log on to your account.
ETFs and everything.
ETFs, TSX, whatever. You have so many options. Speaking of options, you have names that have options on them.
Right.
So it gives the average investor a huge advantage, and now you're starting to see institutional money come into the space.
That's correct, and that's massive. Just the other day, I was just telling a couple of my associates. Just the other day, TSA started allowing medical marijuana and CBD on flights, and that's huge. That's a big up nose to the federal government, because now you're going to be flying around through states that are not federally allowed. Exactly. So that's a huge change, in my opinion. And that's definitely taking things up another level. So let me ask you this. So you were doing this for a while. You were raising money for this company for quite some time. And that must have, during that period of time, you must have learned a lot about medical cannabis, investing in cannabis, the procedures that need to be instilled in companies that have this type of investment opportunities in mind, and so forth. And would you say that's one of the biggest sectors that you're investing in right now?
Indeed. And I don't want people to get the wrong image and say, Lance, look at you. You look long hair, the beard, still looking like you're in Costa Rica. I still love the lifestyle. You don't understand from an institutional point of view, and just even from raising money, the people I was going to and the people who put in the most amount of money were your average retirees who suit and tie, who saw something special in the space. You could compare it to the gold rush, whatever you may. They were the ones who took initiative to have that mindset of, hey, this isn't a boom. And even if it doesn't, the whole government shuts it down, it's worth the risk to put some money into for a potential large return. And that's what I saw too. It took a little convincing. Again, this is coming from me, very conservative, never told family, friends what I was doing. But I realized, A, because I made really good money in the space, but B, even right now, I see Fidelity, Vanguard, the largest holder of Aurora Cannabis. These big investment funds know that A, clients, and they want in on the space, so they're allocating capital to it. Have them look at some semiconductor or biotech stock. They're not going to touch it, but yet they're touching cannabis. Makes you raise an eyebrow.
It's more, like you said, raising eyebrows, more speculation, more upside potential, newer, fresher, different market perspective, not everything already known, and so forth. More inefficiencies. Whenever you have more inefficiencies, you have more potential for unlimited growth, and that's one of the reasons why you're looking at cannabis.
Exactly.
Understood. So where do you see the cannabis market going in the next few years?
Whew. So I want to be clear too. You're going to have, just like in life and business, you're going to have bad actors and you're stars, you're good actors. I see, just like you would in tech companies, what we call ag tech in the cannabis space, the technology behind cannabis. That's where I see the most growth upcoming in the future. It's not necessarily, sales in the local shop down the road. No. I make the comparison, if you want to invest in Macy's right now or Gap, no. You don't want the retail space. You want to get into the technology side of cannabis. And that's where I see the largest growth going forward.
Well, it's kind of, what you're saying is kind of reminiscence of when the gold rush was happening. The smart investor was buying the shovels, not the gold.
Not the gold.
Not the gold. So you're not looking at you're looking at companies that are deep in the cannabis industry, but not necessarily creating the cannabis themselves, but creating the technology and other things related to take advantage and to propel this industry to the next level.
Exactly.
If I may.
Exactly. I want to focus on companies that is an increased efficiency for those providers in the cannabis space.
Are you looking at companies that have complete privity within the space? In other words, everything from seed to retail, or are you solely looking for companies that are not creating the product? Specifically, in other words, if they're creating the product, you're not interested. You're only looking if they're doing something related, but not the actual.
If they're creating product, I want to know exactly that they have control of it and not coming from a third party. I don't want anything involved in selling or retail of it, because just like you do in gold or any other commodity, prices are going to fluctuate. So if I can have a company that's investing strictly in technology to improve efficiency for those farms, we'll say, that's what I want, because I know they're not going to be dependent on, the number, the number or the price of cannabis.
You don't want to get stuck. You don't want to get basically what you're. If I may rephrase this, you want the least amount of movement between the investment and the return, because the more things in between, the more things can go wrong, and the more things. It's kind of like Warren Buffett's idea of investment. The less moving parts you have, the better. That's if you ever look at Warren Buffett. In study his investment styles, Warren Buffett clearly believes that the less moving parts you have, the less can go wrong, which is why he invests in businesses like Coca-Cola, airlines. He doesn't like complicated parts. And what you're saying, if I want to make sure I understand you correctly, and I want to make sure our viewers are understanding us correctly, you want to make sure that you're investing in companies that have full control over their output and over their money. In other words, a change in the price of cannabis is not going to put them out of business, or a shipment that fails is not going to put them out of business or raise price, where they have full control over what they're doing. They're not dependent on weather or another company or so forth, if I'm understanding you correctly.
Exactly. I want to eliminate those variables. So you may consider cannabis a risky asset class. It may be true. If I can eliminate that risk or part of those risks, not so risky anymore, and I still have the upside potential.
So tell me this, since we're getting a little deeper into this, and this is a very interesting topic, I'm also looking at several cannabis companies. I don't look at my whole thing is looking at the companies who go from A to Z. In other words, I'm looking at the same issue. I don't want other companies getting involved, but you take it one step further. You want to be in the cannabis space, but you want to be slightly detached from the actual noise of it, if I may. Whereas I'm looking at companies that have that same amount of control, but in a different way. In other words, there's still going to be, the companies I'm looking at will still be impacted if something happens in the industry, where you will be less impacted because you're looking at, for example, if you were looking at medical equipment, you'd be looking at the X-ray machine versus at something a little bit more derived from the actual patient, if you will.
Exactly, and not just solely the ag tech part of cannabis. That's where I see the most growth in the future.
Yeah.
There's still sectors out there like in medical I love. Are they going to grow? Is every medical cannabis company going to grow 10 times from here? Maybe not. Just like in biotech, there's going to be good ones, there's going to be bad ones. Doing your research and making sure, if you are going in medical, that they have a clear pipeline of multiple approvals in there, huge advantage. I don't want a one and done. I've seen too many biotech investors in my days get burned and they're stuck. We call them bag holders. You don't want that. And in cannabis, if you go find some of these medical companies out there, and what's the big positive right now is that the FDA is saying, hey, medical cannabis just isn't for MS, or it's not for depression or anxiety. There's more treatments that are getting approval, so more of these companies have what I call more outs. Let's say it doesn't work for glaucoma, maybe it works for MS, maybe it works for chronic pain. There's more diseases out there that they can cure and that they can have an advantage of. So again, just like in trading, you want more outs, you want more potential for profits. That's showing up here in the cannabis space as well.
And to just add to what you're saying, we're literally at the brink of the frontier for medical discovery. We're finding out now, we're just now finding out that medical cannabis or cannabis, it's funny how people separated cannabis, medical cannabis. It's still cannabis. Right? It's like alcohol versus legal alcohol versus illegal alcohol. It's still cannabis is cannabis. Alcohol is alcohol. So what they're finding out is, and I was just reading this the last few days, how cannabis is now being linked to reducing memory problems in older people.
Yes.
That's a huge breakthrough. They're saying that this is years from being conclusive, but what showings is that signs of old age diseases related to dementia, for example, are being lessened substantially by people who ingest or consume cannabis. And obviously this is going to take many years to iron out, but the cancer, smoking therapy, weight loss. They're now saying that cannabis is helping people with weight loss, which I always thought was the opposite, but what do I know?
Different cannabis.
Different cannabis.
And going back to the article, there's Time magazine just came out. First time I bought a magazine in years. I actually bought it. The medical marijuana movement. There's an article, and it's funny because the readers, they have their first name and that's it, because they don't want to. Some states.
Sure.
Not only for pets they were talking about, but one article that stuck out was lady had a child who was on Ritalin, ADHD, ADD, couldn't sit through class, couldn't sit through a movie, and small dosages of cannabis, and within 6 months she goes, I could go to dinner with my son and he would sit there, talk to me. I could go to a movie, sit 2 hours, he wouldn't get up, he wouldn't run around. The teacher said, your son is acting phenomenal, what have you done at home? She told the teacher, and the teacher couldn't believe it. I know, coming from a background of ADHD and stuff like that, if I had that at the time, instead of taking these harsh drugs, oh man, that's huge for the future. And as we get to the approval of stuff like this, just think of the potential upside in some of these cannabis, stocks out there.
So it's really amazing how marijuana is being used right now to treat things, and how literally every day they're discovering new uses for it, and people are creating homeopathic medicine that is working on pets and so forth. So it's really changing. Let me ask you something. In the next 3 or 4 years, next 3 to 5 years, where do you see, if you were to just make a prediction, where do you see medical marijuana going and taking us to?
I think you're going to see a massive movement from your typical pharma, whether it be just the drugs people take from everyday drugs, to a shift of a replacement of those drugs with cannabis. It could be, certain types of cannabinoids out there for treatments of just everyday life, like we spoke about, from ADHD to seizures to memory focus, to chronic pain, to losing weight out there. Again, different strains. As we come up with different strains, we're realizing there's so many treatments out there that cannabis can do. And I think you're going to see a replacement in just everyday life. And I'm not just talking about for, us out there, whether it be millennials, older people, retiree replacing their medication. But I'm even talking about even in the animal space or the pet sector. Chewy's about to IPO.
Right.
We'll see how that IPO goes. I'm sure it's going to go well. If you look at names like ZTS, which do a lot of treatment in pharma and pets, the pet sector is huge, and people will spend whatever they want, whatever finances to go through for their pets.
People are very vested in their pets, absolutely.
And it is a booming market. I know. I have a French bulldog, and it costs a lot of money to upkeep. And if I could get in on the pet sector years ago, it would be huge. If I could get into the medical cannabis side and see the pet sector get into that space, you're talking about a massive boom going in the future. And that's where I see it. We're seeing these people continue to spend money on pets. Pets are now taking multivitamins, fish oils. They're having better improvement in their food. People want to invest just like pets as children, because
Right.
some people, that's the pet is literally their child. And I know for myself, if my dog is feeling sick, I'm going to do whatever I have to do, just like a child taking it to the doctor. So I think when medical cannabis companies start specifically treating and going into that pet space, you're just going to see a boom out there like you've never seen before.
So you're saying what you're seeing is what you're seeing is a further fragmentation of the medical marijuana into other sectors, smaller sectors, and deeper into very specific segments.
Things we don't think of right now, that it could be vitamins or food that we just take as an everyday use. Imagine that everyday use, but with medical cannabis being thrown in the mix.
Can you imagine when cannabis gets into the soft drink business?
There's been many rumors of that,
Right.
especially with Coca-Cola.
Right.
And
Right.
I think that's something to be seen in actually the near future.
I do too. I think that's coming our way, especially with Marlboro now putting in almost $3 billion into the biggest Canadian marijuana company. There's definitely blue chip money coming into that space, and that's huge. That's huge.
We talk about the businesses and institutions investing in cannabis. We look at some of these companies investing. We look at some of these investment firms like Morgan Stanley investing. We're looking at big money coming in, and we're getting a replacement of tobacco fields. If you look at Kentucky, all the tobacco fields are replaced with hemp farms.
Mm-hmm.
They can make 15 times more
At least.
in hemp than they can in tobacco. So it's not only changing the way institutions invest, retail, you're getting into the space, but also people you never thought would get in, the farmers out there, it's changing their life as well.
And that's huge. That's a staple, the backbone of America, farmers.
Exactly. You have the backbone of America in cannabis
Amazing, isn't it? Just amazing.
Amazing.
And I mean, think about what's happening with the rest of the world. Mexico legalizing it, Uruguay legalizing it. Several other countries are now at the brink of legalizing it.
Exactly. We didn't even get into the international.
They have, remember something, once it's legal in those countries all have medical teams, developments. They're going to start doing research, the level of research we can't do because of the legality.
Exactly.
So that's going to, and we can, and obviously with the internet, with the world becoming one, that will be adopted in America, and we obviously will copy each other and so forth.
There was the University of Texas in 1997. They had an approval to grow cannabis, and that's where a lot of studies were coming from. 1997. Once, like you said, international, we could start doing research and studies. We don't have to worry about these federal guidelines.
It's going to change the whole world. Once the banking system gets on board, it's going to make a lot of people very happy, and a lot of companies very, very rich. Very quickly. So, and folks, this is why it's important to, Lance has his eye on this in real time, and he's looking at it from every different perspective, not just the medical industry, but how it's going to help pets, how it's going to, other countries are going to be involved. It's just one big factor exploding and getting bigger and bigger and bigger and taking over the world, and that's why we're talking about it now, because this is huge and it's happening now.
It's happening right
now. Yeah. So let me ask you this, getting into specifics, are there any specific cannabis stocks you're looking at right now?
Oh, there's a lot, and every day there's new ones popping up. The key and why you want someone with experience is not just picking the next hot stock you read on the internet or a magazine. You're gonna have, like I said, good ones and bad ones. And I'm the one doing the research on these companies. And thankfully, with the internet out there, I can. I could get information from financials to acquisitions, pipeline that they have coming out. A lot of research I've done, again, going back into the ag tech side, I like companies right now, what I'm looking at is Village Farms. No one's heard of them.
Nobody.
On the NASDAQ, VFF, out there, their main focus is ag tech, building or the technology around cannabis. So they're not necessarily dependent if FDA cracks down on CBDs or something like that. They're still going to be fine. Of course, you're going to have the overall sector goes down. They'll go down too, but they're not going to go down at that rate of, let's say, a Tilray or Cron. You know what I mean?
Where it's a direct hit, right center.
And that's what you want. I want to be holding a stock or investing in a stock that when every other stock's down 10%, maybe I'm down 1 or 2%.
You don't want that correlation to the overall market. You don't want to be that guy that finds the right stock and it goes down because of something completely unrelated to it that has nothing to do with it, just because the rest of the market goes down.
Exactly, and that's just in trading and investing in general, that's been my strategy for all these years.
That's one of the last free lunches of Wall Street, diversification.
Exactly. I'll be honest with you, I'm not the greatest S&P trader. I trade literally thousands of S&P contracts back in the day, a day. Huge size out there for the fun. I could care less what the S&P does right now because I'm focused on company specific out there, and that's how I am with cannabis.
And if you're dealing with, and the truth of the matter is, if you're dealing with companies that don't have a lot of cross exposure to the S&P because they're smaller, there's not volume, and they're not being arbitraged against the S&P 500, then you're not going to have that exposure. And for those of you who don't understand exactly what I'm saying, let me explain. When you have a large cap stock, once it opens, you have hundreds of funds who are trying to arbitrage it against the S&P 500 for very, very few ticks. And that's why if you look at a large cap stock like Microsoft and you look at it next to the S&P 500 after it opens, they will look like they're moving exactly the same way because there's an arbitrage that's happening in real time. And when a stock is small, when it hasn't had that institutional exposure, it's not going to have that strong correlation. And that's what Lance is talking about. And that's huge because it gives them the opportunity to make big money without worrying what China's going to do tomorrow, without worrying what Trump is going to tweet tomorrow, without worrying what earnings on Microsoft are going to be tomorrow. He doesn't have to worry about any of that. His stocks beat to the rhythm of their own drummer.
Exactly. Honey badgers.
Completely independent. If I've done correlation studies, anything that has a correlation of 0.66 or higher to the broad market is very correlated. Two-thirds 0.6. What I found, you may be interested in hearing this, but what I found is the type of stocks you're looking at typically have a correlation of less than 0.20. 0.0 is negative correlation. That's just a dream come true.
Right.
You can't get better than that. So, but 0.20 is very historically insignificant, and that's over 3-year rolling periods. Not specifically the stock you're talking about, but the type of stocks you're talking about. Because I'm always doing everything quantifiable. I'm trying to see correlation, and I was able to get it down to about 0.25, 0.20, very low correlation.
Wow.
So you're completely safe from all these sporadic moves that we're seeing because of Trump and tweets and China and Mexico and so forth.
And I know for my trading, I don't want to be dependent on reading every news headline out there. I just like the audience, they think enough during the day. Why do they want more things to think about and more worries of, oh no, there's a new headline out, or oh no, this came out? I don't want to be glued reading news articles all day, how they're affecting the market.
Or being dependent on what they do.
Exactly.
And nothing, folks, I'm going to tell you something. Missing a trade, it happens all the time. Getting your stop wrong happens all the time. But you know what really bothers me and most traders? Being right and not making money. Oh, doesn't that burn you? When you're 100% right on the trade, you're right 100% of the timing on the trade, but something happens and so you get on this trade, the trade is moving up, technicals are moving in your direction, sentiment is moving in your direction, everything is moving right, and the stock market just starts falling down, and all of a sudden that positive gain turns into negative, and then the next thing you know, you're looking at a stock and you're looking at the S&P 500, and they're doing the same thing. They're a mirror opposite of each other. And then you're thinking to yourself, what the heck is my analysis good for? I've spent 5 hours analyzing this stock, and it's doing exactly what the S&P 500 is doing. Been there, done that many times. Know exactly what you're talking about. And that's the beauty of these stocks. Now, you may have to use a limit order. You may have to work the order to get a good price, but your correlation is going to be much lower. And that's going to make you independent. That's going to make you not compete with the overall stock market. Because if you compete with the overall stock market, your gains are going to be limited to the overall stock market. And we're not having this conversation so you guys can get 5.98% return a year on average. That's not what we're looking for. If that's what you want, you can just invest in the S&P 500 and be done with it. We're looking for monster outsized gains.
Exactly.
Yeah. So let me ask you this. We've talked a little bit about marijuana. I got a good feel for it from you in terms of what you're feeling. And it's very interesting that you and I are seeing it very similarly. I'm looking for that. I'm also very concerned about impact of laws and regulation. The way you're dealing with it, you're just simply avoiding companies. You're eliminating them. You're just saying, hey, regulations, I'm going to deal with a company that doesn't deal with them. The way I deal with them is I just try to find a company that's doing it from A to Z. Right. So there's less of that noise coming in. But yeah, I mean, if I'm going to buy a Florida stock company, like Trulieve, for example, that's the #1 Florida stock company. If I was to do that, for example, and the government says marijuana illegal in Florida, Trulieve is pretty much out of business.
Exactly.
And it sucks, and it's not fair, and the odds of that happening are probably very low, but it's theoretically possible, right. especially with it not being legally federal. But in this case, you're still going to make CBD. You're still going to make other things that are related to marijuana, even if you outlaw it here. So you're taking a more diversified approach from a different perspective.
Correct.
Tell me now, what do you think about cryptocurrencies? What's your take there?
Right now, is anyone talking about them?
Nobody. Last year, a year ago, it was That's all. I was at a conference. It was a year. It was a month before I moved to Ponte Vedra, exactly a year ago right now, and I was here on a conference, and no one talked about anything except cryptos. And by the way, that was the high.
So going back to your question, if you ask me if I like them now, nobody's talking about them.
No one.
I love them.
Tell me more.
Going back to our conversation earlier, when nobody loves it, I love it. When
Right.
nobody wants to buy it, I'm buying it. When everyone loves it, I'm selling it. So you look at the space of cryptocurrency right now. It's not getting that mainstream attention, and crypto's over doubled in the past couple months, or at least the price of Bitcoin. Litecoin, I think it's 3x, and a few other cryptos gone up to 300% off the lows already. I think as long as we don't start getting a big pickup and being dependent again to the news headlines, I think we have that already out the way. So the positives in crypto right now are we are seeing growth in the space and not getting that bubble feel anymore. We're having businesses invest into the cryptocurrency sector. We're getting large companies slowly, I mean, you don't hear about this anymore, putting divisions along to be a part of cryptocurrency. We're also hearing about regulation, China overseas, which were behind the whole boom and bust before.
Right.
We're not having that anymore. So we're having money flow into crypto, causing price stability without those crazy fluctuations we were having in the past. So I think we're going to see institutional money come in into select cryptocurrencies. I think when we look at Ethereum, Bitcoin, Neo out there, you're going to see the ones that have been around for years succeed, and just like in small cap stocks, the ones that are volatile, the bad players, push them aside. You want those darlings, those stars, and that's where you want to put your money. Not in the more speculative side. Like I remember I heard Dragon Coin, make up Lance Coin, probably gonna boom and bust. The stable ones, that's where you want to put your money into, because that's where the institutions and the big players are putting their money into.
I'll tell you my perspective, and it's not very different than yours either on this, but my perspective is I'm looking at cryptocurrencies right now like we looked at the internet when AOL was around. I'm looking at it as a discovery stage. Mm-hmm. What I'm seeing is that all of these cryptos, not all, the majority of these cryptos are just gonna go quietly into the night. We're going to take the big stuff, the big discoveries, the big developments in technology, especially security, which is the biggest, security. And I think that what we're seeing now is just going to become, when we look ahead, 10 years down the road, it's going to be the beginning of something. It's going to be, I think crypto is going to be used much more in terms of how money is being used in a general sense. It's going to replace credit cards, it's going to replace security, it's going to replace tangible currency. But I think what we're seeing right now is just the very, very early beginning stage of that. And I think it's just the birth of the technology. And I think we're going to completely reinvent where it's going to go and how it's going to help us, mankind, over the next decade. In other words, internet was developed, you had AOL, it was kind of like an idea of what internet would be like in a very limited sense. And then everything that was available on AOL was available for free just on the internet by going to Yahoo or whatnot, which kind of made it weird that people had to pay $10 or $20 to find news or weather on AOL, where they could just do it on Yahoo, and AOL became free. But I think that's kind of what we're seeing. I think this is the first incarnation of what cryptos will give us. It's kind of like an introduction. Here we are, this is what we're going to do. We're going to change the world, but we're not there yet. And quietly, a lot of them, 80-90% are going to go quietly into the night, or there's going to be a lot of mergers and takeovers. The development is going to continue at the rate we're seeing, And I think we're going to see a lot more things in the next several years that will actually lead to what we're going to end up using cryptos for. So to me, this was kind of like a big, hey, I'm here. I want to show you what I've got for you. But this is just the first stage.
I'm happy crypto had its run, and this may sound very mean, but I'm happy crypto had its bust. It got the bad players out, and the speculators who just wanted to throw money at it. I went to Bitcoin parties years ago, put it that way. People were just buying Bitcoin and every crypto they can. I'm glad that got out the way, and it probably left a sour taste in a lot of people's mouths. But going forward to the future, I think it was a good thing. Because the winners are going to last, the losers, like you said, are going to fade away. And going back to, cash and wallets and everything, I think cash is going to be dead. Holding my wallet in my back pocket, causing my back to probably get some, my posture to
or your pants to tear, or the pocket to tear.
And just the uncomfiness in general. We're gonna have, I feel like in the future, where cryptocurrency, whether it be watch, phone, bracelet, whatever, where I don't have to go around carry cash to pay for everything.
Right.
And I will have that account linked up minus what you have in credit cards, where identity theft, numbers, pins, I think they're going to be replaced.
Right.
Internet security is huge.
Yeah.
Identity theft is huge. If cryptos can conquer that market, that's a huge advantage.
Do you think the federal government is going to try to create restrictions, regulations, or put roadblocks into cryptos becoming first-class form of currencies?
I think you'll have, just like you've had in the past, the federal government will step in and make comments on it, but at the end of the day, they're not going to be able to ignore it. Just like you see, the federal government open up on cannabis out there, especially locally, and now international countries, you're going to see the federal government say, hey, this exists. It's a multi-billion-dollar industry, only going to grow. They have to have some kind of presence in there, whether it be some kind of regulation, hey, fine. But they can't avoid technology,
right.
And that's the key.
Right.
And we see them, right now with Facebook, Google, them looking into it. They're going to look into it. Is any action going to be taken? Probably.
Maybe, maybe not. But how? But you know what? Google and Facebook will still be here 5-10 years down the road.
They're
right?
still going to be here,
Right.
And that's what you have to look. You have to look at the long-term picture. So when you do have these headlines, just like in cannabis, just like in Facebook, Google, Apple, historically, they've been fantastic opportunities to get your feet wet and buying. And I think that's what's going to happen, and even in the future. When you do have negative headlines, use that as an opportunity.
I hear you. I hear you loud and clear, and what you're saying resonates. It's really resonating. So let me ask you a few more questions. What, right now, if you were to be giving someone an investment advice, somebody's listening on the other line, what general, not specific stocks, but what general trends are you seeing in the next 6 months to a year? And I don't want to put you on the spot. And if you don't see any, that's fine too. And it could be a downtrend. It doesn't have to be an uptrend. It could be something going negative. What do you see happening? If you had a crystal ball in front of you, what would you say?
Let's say I had a handful of names or sectors or picks I had to give,
right,
so to speak. And of course, we're going to have overall market volatility. I don't want anything correlated with the S&P or the market. I don't want to be dependent, as we spoke about. I think when you have, going back to our conversation on cryptocurrency, I think if you can either A, buy like a Bitcoin or the coins themselves and get in, I think that will be a boom. I wish there was more stocks that were invested in the space. Back in the day we had Riot, which was a bad actor. We had Overstock, which Square has a little exposure. And again, going back to the whole digital side of currency and the digital wallets and everything, I think you could see a big player there. Even these credit card companies, they're probably going to adapt into the crypto space because they don't want to be left behind. And going back to cannabis, not necessarily picking out cannabis companies. We'll save that for the clientele who want more of cannabis, but using the boom of cannabis to look at restaurants. People don't talk about a Denny's or a McDonald's out there. Pull up a chart of Denny's or McDonald's. The most beautiful charts you ever seen.
Right.
Is there any volatility in those names?
Same thing with Disney or none of those companies.
Is there any correlation with the S&P? No. Because what are people doing? They're going to go out to eat. If, let's say, they partake in cannabis and cannabis keeps booming, more states, people have to eat. So you're going into the food space, the dining, and they're not fine dining. So let's say the economy downturns. People are still going to spend $5 on some eggs and pancakes.
Well, consumer staples versus consumer discretionary is what
Exactly. And these companies are so well run too. Like even like a company like McDonald's evolving with technology, getting digital out there. They're not messing up my order out there. Going to alternative. We're having healthier menu items. Even at Denny's, egg white omelets. McDonald's going into salads and wraps out there. They're not going to go away. So if I look into trends that are happening, cannabis, you could pick your cannabis stocks, and I have tons of them. Really good ones that I see a future for. But even playing the names out there like a Denny's or McDonald's that are going to boom as cannabis booms, no one talks about them, and they're fantastic.
Understood. Very interesting way of thinking about it. You have a very interesting way of thinking about the market that's actually very different than most traders, which is what's so appealing.
Also, too, we didn't talk about the technology of people are going to spend money. Retail is always going to be there. And I'm not talking about a Macy's or a Gap out there. I'm talking about being able to go and shop right here on my phone. So companies that have adapted to make shopping easy on one click, that know everything about me. Denny's, for example, on the app, I get food delivered to me. 30 minutes.
Really?
I got my egg whites, pancakes, like turkey bacon if I want. Even shopping, Lululemon. People say, retail, the store's a bust. Lulu knows everything about me. They know my size. They know how to specifically target me of what I want, of what I've ordered before. So when there's something new, one click. The app's so easy to use. You go to a Macy's out there. Do they even have an app?
I don't know. I'm not sure. I don't think so. Not that I'm aware of. I'm not a big Macy's guy, but it's possible. I don't know. You would think they would, right?
Companies investing in technology to make life easier.
That's what you're looking at.
They're going to be the big
You're
winners.
looking at companies that are going to be providing the technology for brick and mortar companies that have been around for decades and decades. Basically what you're saying is you want to get in on the companies that are helping you bridge the gap between those brick and mortar, that are helping those brick and mortar companies become digital and are getting into the digital age.
Exactly.
And they're obviously not doing it themselves. They're hiring other companies and technology to do it, and that's where your focus is.
And that's the future.
That is the future.
That is the future, and that's what I want to be a part of. Is the future. I don't want a GE or IBM or a Boeing. Sure, they've been around forever. Maybe they pay a nice dividend, but they're not going to provide something that's people are going to want for the future, and that the new generation is participating in.
Right. Well, Lance, listen, it was absolutely fantastic. I think we spent close to 2 hours talking. Time does fly when you're having fun. And I was glad to learn a lot about you. I mean, we've talked about so many different things. My head is spinning, but we talked about how you got started in investing. We talked about you leaving America for South America unexpectedly, coming back, losing your girlfriend, living at your mom's house for a few months, getting back on track, working at a investment firm, managing a hedge fund, doing tons and tons of trades, raising money for a pharmaceutical company. We talked about your investment methodology, your trading style, how you like to buy, what sectors you're looking at. I think we covered it all. And I had an amazing time. It was a pleasure. It was really, really a great experience. And I want to thank you for your time. It was really great.
Thank you, Roger. It was fantastic chatting with you today.
Folks, it was great. Again, I want to introduce you to Lance. It was an amazing experience. And if you have any questions, please feel free to email us at support@wealthpress.com, and I'll forward those questions to Lance so he can respond to you. Thanks, everyone.
Lance has my stamp of approval, and he's going live July 2nd under the Wealth Press brand to unleash the future of wealth. You really can't afford to miss this. I've been watching the markets with Lance the last few weeks, and what I've learned from him has opened up my eyes. And folks, I've been doing this for 25 years, and I want the same for you. So follow the link below and register for Lance's live event. Talk to you soon.